Hello and welcome to the Compound Income Scores. This is a quick video just to give you an overview of what they are and how they work. Well, in the first two columns you've got obviously the ticker and the names, which are fairly self-explanatory, but just in terms of the names, I think I did explain on the website, but they're colour-coded, so blue being blue chip FTSE stocks, lighter blue being the mid 250, purple being small cap, and red being the sort of much more risky AIM stock, so you want to be a bit careful with those. The other columns then going across the right, we have value, dividend cover, dividend growth, financial security or the balance sheet and how good or bad it is, operating quality in terms of the business itself, margins, return on capital, things like that, and then estimate revisions over 1 and 3 months. And those are all individually ranked 1 to 100, with the 100 being the best. And those are then sort of re-ranked and scored in what I call the compound income score, which again is 100 being the best, 1 being the worst. We then have EV to EBITDA as a valuation measure, again ranked 1 to 100, and price momentum on the same basis, as well as an overbought oversold indicator, which is based on 1 month and price momentum and 200-day, or in terms of the price and its distance from the 200-day moving average. So it's like a combination of a short-term and medium-term overbought oversold indicator. You then have the actual 12-month price momentum there in that column, and then if we move over, you've then got valuation metrics like the simple PE and dividend yield 1 year forward, as well as dividend growth forecast for the next year and what it's been over the last 5 years. Then one of my favourite valuation metrics is the EBIT to enterprise value yield, which is shown in column S there. And then finally we've got market cap and the enterprise value, which is simply the market value plus or minus debt or cash that's on the balance sheet. And then finally this EVA ratio, which is something I've introduced for income investors as an alternative to the PEG ratio that growth investors use. And in this case I'm comparing the enterprise value multiple, EBIT to enterprise value multiple, with the expected return, so hence the EVA name for it. And the expected return is simplistically just the dividend yield plus the 1 year forecast dividend growth. So assuming no change in the rating, then you would hope and expect that your total return would be made up of your yield plus the change in the share price, which should equate to the dividend growth that's come through, assuming obviously that the stock's not been re-rated or derated, as I say. And then so here you're going to look for the lower figure to be the better one, so it means you're paying a lower price for the expected return that you're looking to get, and obviously it just does help to make comparisons easier between a stock that's got maybe a low yield but a high growth rate and vice versa. Other things that you can do on the sheet, if you're not familiar with Google Docs, this one here is sorted alphabetically at the moment, but what you can do is come up the top here, click on that down arrow, and then you can go sort Z to A, and just by selecting one column that then sorts the whole sheet in that way. So we just wait for that to work, and there you go. So we're now sorted by the compound income score from best to worst, and then you can start doing your research from there on down. If you want to find an individual stock, you're wondering, well, how's Glaxo scoring at the moment? If you're on a computer, you can hold down the control button, then do F, and that brings up a box there, and then it just searches for Glaxo, and there we are. You can see Glaxo's come up, and then you can have a quick look at Glaxo's rate and see, oh, it scores 62 on the compound income scores. That's about it. I hope you've enjoyed this brief introduction to the compound income scores. If you have not already got access to them, you can sign up at my site, which the address for which is CompoundIncome.org. Thanks very much for watching. Bye.